Good morning, everyone. Thanks for taking your valuable time attending this webinar. Custom holding account, what is it and how to use it in class? A couple of housekeeping items. Copy of the PowerPoint slide and the case study materials should be emailed to all attendees before the webinar. In case if you have not received them, they can be downloaded during the session. Recording of the webinar will be made available to all attendees through the class website. You may ask any questions during or after the webinar. At the end of the webinar, we will send a short survey for some quick feedback. Once we collate the polling results and the Q&A sheets, we will make them available to everyone along with the recording of the video. The original presenter is Sham Hamed. Unfortunately, he's sick today, so he sends his apologies. So I volunteered because customer holding account is an area that is very close to my heart. I honestly believe if it can be used, it can be a very useful tool if you know how to use them. So quick introduction about myself. My name is Kevin Zhang. I'm the Compliance and Technical Service Manager class. I have 20 years industry experience, 10 years with class. I'm a chartered accountant, self-managed super fund specialist advisor, registered tax agent for class. I graduated from Sydney University with Bachelor of Commerce and Law. So for anyone who has attended my webinar previously, my session tends to be quite technical and very hands-on. It is really aimed at experienced class users, self-managed super fund accountants, or administrators who have to do administration from beginning to finish. Okay, a quick disclaimer. The information I provided here is general in nature, should not be relied as an advice. Some of the features and functionalities may change and improve over time as we have taken into your feedback and suggestions. While waiting for more attendees to arrive, here's a first poll question on customer holding account. So just bear with me, let me launch this poll. Okay, the poll question is, how do you use customer holding account in class? Is A, you use predominantly to deal with one-line wrap or portfolio investment account. 2, used for loans and borrowings. 3, used for option trading, specifically exchange trade options. 4, is it used for as a sundry assets or liabilities? And last but not least, any other uncommon investments. And I'll give you a few seconds to complete these questions. All right. Thank you kindly for your answers. Let's get started. Okay, today's agenda, we will go through what is customer holding account and when to create one. Some of the common transactions related to customer holding account. We'll go through the specific scenario to do with one-line wrap. How customer holding account can be used to support loans, holding deposit, and settlement receipts. How do you account for the what I call exotic investments such as exchange traded options or livestock using customer holding account? And how you use customer holding account for non-investment assets such as borrowing costs. Then we'll go through a more comprehensive case study. This is based on the Little Kingdom Super Fund. Okay, so what is customer holding account? So customer holding account really is a very generic investment account that you generally manually set up. They are generally non-unitized investment account. It's best suitable for investment account that's unique to a self-managed super fund, excluding properties. If you have an wrap or platform investment account and you do not have a direct connect fees with class, it's recommended you set up them up as a custom holding account. And the other popular scenario when you use custom holding account is to support uncommon investments such as exchange trade options, CFDs, used for account of livestock, racing horse, ATM. I even seen people using it for lobster or crayfish license, taxi plates, vintage cars, etc. Another area we have been used custom holding account quite extensively is for the loan or borrowing accounts. Some of the products like a Makoti equity lever, we will automatically create the loan account through a custom holding account. Rate setter is another one where we create the loan as an asset, loan by the fund effectively. Partnership interest is another one where you will see a lot of people try to create a custom holding account through. On the non-investment side, so to support a lot of other general ledger accounts such as sundry assets and liabilities, prepaid expense, earned income, and borrowing costs. Now, how to use custom holding account? So the following three are uniquely related to custom holding account. One is custom holding accounts almost like a bank account. So most people are very familiar with how to enter bank account items through a debit and credit, or cash in or cash out. But there are specific transactions related to custom holding account. One of them is the fund income realized accounting and gains loss event. That event allows you to record both the accounting gains or losses as well as the capital gain or losses. And we'll go through an example when we drill down to the case study. Custom holding account is one of two other investment account where you handle GST properly. So the other one is obviously in relation to commercial properties. So you can process GST through GST paid and GST received. We'll go through that example later in the case study as well. A quick tip, because custom holding account is almost like a bank account, you can basically leverage the transaction rule functionality in class to create a lot of rules to support your custom holding account. One-line wrap. So now, before you do go ahead set up a one-line wrap account, the first thing you should check is our wrap platform data feeds. We have a quite extensive list of data feeds that we already support. And if you know you can get direct connect feeds through one of the providers, we strongly recommend you set up data feeds first, because that will take care of 80-90% of the transaction related to a wrap platform. Now, in what situations you should set up one line wrap or platform account? Well, obviously, if there are no direct connect feeds to class. Secondly, if the feeds are not ready yet, but there's a time pressure for you to finish the job. Lastly, if you're an experienced class users and can professionally use custom holding account. Hopefully from this session, you will become one very soon. Now, what are the key benefits of using custom holding account as a one-line wrap? So it is very, very flexible, and we'll explain why. And most people, once they get their head around how it's supposed to work, they can become very proficient in dealing with custom holding accounts. And generally, they are advisor friendly in the sense that you rely on good reporting from the wrap and platform providers. Another tip, so for people who are using one-line wrap processing, especially for the first few years or first few attempts, we strongly recommend you keep cash separate to the main wrap platform account. The reason is it's more intuitive to keep them separate, and once you process all the cash transactions, and you effectively done all the transaction related to a wrap platform as well. And we'll go through a live example, see how we handle that. Another very common examples of using custom holding account is where you use for the limited recourse borrowing arrangement. If you finance the borrowing through financial institutions, such as the Big Four banks, we strongly recommend that you set up as data feeds as well, most of the big four banks actually support a long account as a fee. But if that's not the case, if it's say it's a related party loan, then you can use the feature for custom holding account. Now, here's an example. So the underlying assets or investments you have to set up as LRBA dash Australian residential property if it's in relation to a property, or non-residential if it's in relation to a commercial property. But the borrowing on the other side, it's the same. So you set up for general ledger classification, limited recourse borrowing arrangement, but the tax return has to be borrowing dash LRBA. On the right hand side is an example how the customer holding account is automatically created by the feeds that support Macquarie equity lever products. Basically, every parcel of shares that you bought through that product, it will automatically create a long account to support that. On the flip side, you have a loan as an asset. So given we're living in a very low interest rate environment, so rate setters is one of the products start become attractive to a lot of advisors. So the way, again, Class can create automated feeds through rate setters, but the general ledger classification you set up as a loans, in this case it's a loan as an asset, and the tax return again reflect that as an asset rather than a borrowing or liability. Okay. For some of you who have been to Therese's webinar on property processing in class a few months ago, I highly recommend if you haven't attended one, at least watch her webinar. So one of the areas she did cover is to do with buy and sell property across financial years. Now, if you do buy a property across multiple financial years, we strongly recommend that you use a customer holding account to temporarily house the deposit in year one. And once the settlement is gone through in the following year, reverse the customer holding account by processing the deposit event again, along with the settlement. And you can use the depreciation worksheet to backdate the CGT date to the original contract date in year one. The reverse is true for a settlement event where if you sell property across multiple financial year. So on the left-hand side, I explain how you create a custom holding account for deposit. On the right-hand side, it's how you create a custom holding account for settlement. Now, the reason is you basically, again, create this account to temporarily house your settlement receipts as if the property is fully sold. And this way, the correct capital gain or loss is calculated in the year where you enter the contract, not the year where the property is settled. All right, let's move on to the next topic, exchange trade options. Here's some legislative reference in relation to ETO. So basically, if you receive a premium, there's a CGT event D2 will be triggered in relation to writing an option. So generally, it will be a capital gain. And the reverse, if it's buying an option, you pay a premium, then if at the expiry of the premium, you trigger CGT event C2, which generally is a capital loss. Now, this question we often receive: can you treat exchange traded options as trading stocks? The answer is no, not just for this ATO ID, but the legislation has changed back in 2012, where they amended the Income Tax Assessment Act to specifically excluding options and shares as the trading stocks for sale managed super fund or super funds in general. Now, have those in background. The way you set up options, obviously, you set up the option investment account or option asset liability account as options descriptions ETO or ETO trading account. But the most important thing, it is in a CGT asset, so you can select other CGT assets or CGT events. Now, as you process the buy and sell in relation to an ETO buy or ETO sell. So it will be cash into the option trading account, and the other side will be cash out to your normal cash settlement account. And the reverse, if you're writing an option, it will be a cash out to this option trading account to indicate it construct a financial liability or investment liability, and equally will match to a cash you received in a normal bank account. So at the end of year processing, you basically, all the exchange traded option buy and sell transaction with expiry date for the current financial year will result in a realized capital gain or loss. You process realized accounting gain or loss event to record the net gains or losses for accounting purposes, as well as for capital gain purposes. And the unrealized gains example, so any exchange traded options that do not have or the expiry date is beyond the 30 June cutoff date, then they are either represent an asset or liability in the option or trading account. Now, we recommend you set up a customized income expense type, one for the ETO unrealized gains, one for ETO unrealized losses. Both are really accounting concept. They're not mapped to the tax return. And basically, you can use that to increase, decrease the market value of that option trading account. The user guide actually will go through a live example, real example how you handle them. So I highly recommend that you click through to read the user guide page. Okay, exotic investments. So we're going to go through an example of livestock in my case studies. So normally when you deal with livestock, the fund usually registered for GST. And you can process the GST buy, the GST sell to record GST paid and received. This is how you set up custom holding account in relation to, say, cattle. It's usually reflected as other assets, as a non-CGT asset. Now, normally, if you sell cattle for profit, then we recommend you create an investment income related to profit on livestock sale. Then you can map them into the appropriate tax return label. So normally it should be treated as other income. Okay, non-investment assets. Most common one is some sort of debtors or sundry assets, or creditors, sundry liabilities. We see a lot of support calls about how to set up borrowing costs and how to do amortization on borrowing costs. Again, you can do that through the custom holding account. Preparing expense and rental bonds are another two common examples for sundry assets using custom holding account. On the other side, you will have short-term loans and earned or accrued income. If you actually process a normal investment income, say a distribution, if the distribution is not matched to a cash, CAS will automatically accrue that and become a receivable. And the reverse can be true for an expense. Borrowing costs. So there's two ways to account for them. The first one is you set up borrowing costs as a custom holding account. The reason is you usually will get a tax benefit or tax deduction. So for that, you create as an asset. It's a sundry asset, non-CGT asset, obviously. And on the flip side, you can create investment expense called amortization on borrowing costs. You can map that into investment expense and a portion by actuarial percentage. Obviously, that's deductible. Now, some auditors or tax agents have the view that the borrowing costs should not be created as an asset. They should be expensed in the year it's incurred. So, but they still want to claim deductions in the following years. So the way you do it is you set up borrowing costs as per usual, but obviously these are not deductible and not mapped to the tax return. So you expense in year one. Now, you expense when you bought a new property. Now, when you want to claim the amortization or the borrowing costs, what you do is you create a deductible expense portion by actual percentage and map to other amount. Now, then on so that will create a tax expense. Then you do a negative. You process the same borrowing expense amount but negative value, but override the deductibility. So say 1,000 negative 1,000, so that match off each other. So for accounting purposes, there's no additional expense incurred for the year. However, on a tax return, you'll get a $1,000 deduction. Okay. Now we're going to spend most of the time going through the case study on Little Kingdom Super Fund. It's a very simple fund in a sense that there are two members, Ben and Holly Kingdom, both in accumulation phase. Now we're going to go through that case study using a one-line wrap. We'll go through how you account for borrowing costs and how to account for self-livestock in class. Okay, here's the fund. The first thing I want to show you is perhaps the investment for this fund. So it's a simple fund, two members. Let me just bring the members balance. So Ben's got slightly more, has a much higher balance than Holly. It's roughly about $500,000 thereabout. And majority of the investments is in this wrap platform account or one-line wrap account. It's a premium separate managed accounts. Now, I'll quickly show you how we actually set it up. Okay, let me just edit this. Now, general ledger classification, you can choose list the shares or personally, I prefer managing investment. Tax return classification, again, you need to look at the underlying asset classification or asset allocation of that SMA. If the majority is shares, you can create as listed shares. If the majority is managed funds, you can select unlisted trusts. And you can also use other managed investments. So in this case, we keep as listed shares. And the capital gain classification, again, shares units should be sufficient. Share units, listed shares, or other CGT assets or CGT events. So that the market type should be platform wrap and platform account. So once you're happy, you save that. The unrealized tax provision normally by default class was set at 10%. This is based on the principle that most of the investors invest through a self-managed super fund will tend to hold investment for a long period of time, and they tend to get CGT discount or 1/3 discount, so you'll be taxed at 10%. Obviously, if you disagree, you want to change to 15, you can do that easily. All right, let's close that. Now, I'm going back to browse holding accounts to show you the cash side. So I have the main premium and cash account created separately. As at 30 June, so I do have a report. This is on the annual statement report. There's a starting market value of 317,840. This is the combination of the market value for the one-line wrap plus the cash account of 35,217, and that should equal exactly 317,840.72. Okay. Why we want to check that? So we always want to make sure we're starting with the correct balance. Then when you process this, you know you have the right results. If you have the wrong balance, it's almost impossible to reconcile, do the reconciliation exercise. Okay. First thing first, let's load the cash. So I already taken the liberty to do that for you. So this is the main cash account, and I'll load 211 cash transactions. And this is directly copied from the cash book from the providers. And I'm just copying and pasting to class. Okay. Now, yes, 211 cash transactions seems to be a lot of processes that needs to be done, and I'll show you how you use one-line wrap to make this a relatively painless. Let's go through that. All right, the first thing is on the tax statement event, the tax statement handout on page let me see, page 26. Now, there are a bunch of distributions of dividends or income accrued in previous period, but they received in the current financial year. And let's just make sure we record that properly. So to reflect that, most of the wrap platform probably already accrued the income in their books. Therefore, it'll be reflected as the cost or market value of the one-line wrap. But now they're received as cash. So what I'm doing now is I'm processing $531.61 as cash out to reduce the portfolio. But on the flip side, I need to match that with the cash. So all the transactions happen. This is usually the dividend distribution received immediately after the financial year 1st July. So let's go match them. Okay. Couple of tricks. If you've got a lot of transactions on the cash side, you can put a day range filter, and let's say it's before, say 30/8, 2017 filter. Okay. Now let's go back to refer. Let's sort by descriptions. It's probably easier. And go to page 26. Select the ones that's display on this report. So I've got AAA, Dexus. I've got 1, 2, 3, 4, but one of them is not in the list, which is 1475. Untick that. And then I've got IF. I've got GMG. Then IF 74 and 29. ILB 74. Tick that. And then the last two is the to manage funds. Okay, that comes to 531.61. And where's my 531? That's that one. So that's the accrued income, and it matched perfectly. Match that. So this is recognizing the cash has been received in the main cash account, and accrual that you did last year, you basically write it off. The next part we're doing, because we've got so much cash transactions, what I did was I built a lot of transaction rules around those cash transactions to make your life easier. Now, I want to show you how I create those transaction rules. Now, as you go through cash transactions, so there are 25 of them. Let me just make it see all of them. Okay, the most common one, I would start with the interest, the monthly interest. That goes to a cash account automatically. I'll process interest received. The next one, very common, is the expense. The expense side, the advisor fee, is ongoing advisor fee for the months. So I create as advisor fee. You can flag to calculate GST automatically. And the other one will be the platform fees. Let me just, okay. So that's the non-advisor fee for the months. And you can create that as a platform wrap administration fees. Again, you can track GST automatically. Okay. Now, so normally for the dividend distribution and foreign income, we don't encourage you to create transaction rules for, especially if the underlying investments are properly tracked through class. We will actually generate income for you automatically. So there's generally no need to create a transaction rule for that. However, this is an exception. The reason being is these wrap statements consist of bunch of shares, listed trusts, exchange traded funds, a few managed funds. So you will have foreign incomes, you will have distribution from trusts as well as dividends. Now, normally when you receive distribution, you do not know the breakdown of what that distribution is made of, because you need to do a tax statement at the end of financial year to reflect that. So, and because of that reason, we encourage you to, if any narration mention anything to do with SCG or GPT or Westfield, WFD, then you know they are likely to be distribution. So you create a transaction rule to pick up that. The other one I did was predominantly for the foreign incomes. So ResMed is the example. You know they're going to generate a foreign income for these ones, but unfortunately, the transaction rule does not necessarily handle the foreign tax credits because it's not using the income announcement data from class. However, we can process one journal at the end of financial year to basically reflect the foreign tax credits. Okay, so that's the reason I create those rules for predominantly for income and distribution. Hopefully, by running the rules, I can reduce a lot of transactions. Okay, if we go, so obviously to run the rules, you can make transactions, run transaction rules. Okay, and let's create business events or 90 transactions. So I start with 211. I match off a couple of receivables, so about 9 of them, and the transaction rule basically take care of 90 transactions. So altogether, almost half of the transactions are done simply by doing this. So what's left? Obviously, for wrap processing, we need to process the income side. So as I said, I did the foreign income, but I did not do the foreign tax credits. So the first thing I want to show you is the foreign tax credits. Let that go through. Now, the fund also has a couple of unique transactions. So one of them is a transfer from another bank account to this bank account. So I can probably match off that. So that's the 45,000 deposit from our MP account. So if I click auto match, run auto match, yeah, it picks up that. Great. So I'll just get rid of one more cash transactions. The next one, this expense is basically a unique expense. So you don't need to, if it's one-off transactions, you don't necessarily need to create a transaction rules. So just click match to new, find expense, make a bank fees, and just get it done. Okay, it's the $60 expense recovery. Okay, so the next thing I've got to do is the foreign. Remember I said I only process foreign dividends, but there's no foreign tax credits. Now, how much foreign tax credits has been reported on by this wrap platform? It is on the tax statement handouts, and it's on page 6. So the total foreign dividends for the year is, so the cash is 1752.51, and the foreign tax is 309.26. So let's just reflect that. Let me just open this in another tab. Okay. Business events. So the good thing is I already done most of them, and it's just not submitted. So this is the foreign income that I processed. So what you do is you record foreign tax credits and gross amount match exactly the same value as foreign tax credits. The net amount is basically zero, nothing to be matched. Submit that. And that's it for the foreign side. Now, normally I always encourage people to have their operating statements and the stem financial position running side by side. The reason is once you process something, you can always go back and check. So for example, the foreign dividend, I can see it. It's 2061.77. It matches exactly. And if I drill down to oh, statement of financial position, refresh. Sorry. Then you probably can see the foreign tax credits there. Yeah, 202. Yeah, 309.26. Okay, let me just go back. So I've actually have the step publish. Okay, foreign income is done. Now the next thing we need to do is the dividends. Now remember, I didn't create a transaction rule for dividends, and the reason is this SMA account do report dividend very, very well. So all I do is just create one dividend for the year and match off to the cash. So dividend information is page 5. Okay. Again, I took an easy path, already processed that transaction. It's incomplete. But if you go back to refer page 5, you got your total dividends, franked amount 5, unfranked amount 554.14, franked amount 1928.82, and franking credits 826.62. Happy with that? Submit. Okay. You get a warning about 45-day rules, but hopefully your portfolio provider should handle that automatically. Now, once I process that, I need to do the matching. So let's go to match transactions. Now, so this is the dividend income at 30 June. But so a couple of tricks, how do you do match properly? So one of the ways you can do it is using a filter. So anything that potentially contains dividend should match to this event. So let's just do that. All right, then we'll select, and then another trick is if press Control Shift, it will let you to multi-select all of them. And it's 2482.96. Then you tick this, you match. So on the right-hand side is the cash, on the left-hand side is the dividend event I just processed. So we've done foreign income, we've done dividend, now we need to do distributions. So most of the distributions already accounted for, except one of them. So the cash one is already dealt with. So the receivable on the other hand, it's not. So those are distribution accrued, but not yet received. So that information is available on page 10. And if you see the last column, you have 3,352.24. This is your distribution accrued, or the distribution receivables. So I already have that processed. Oh, sorry, in pending state. All I need to do is submit that. So to reflect its accrual, you do counting day 30 June, payment day 1st June 2018. Submit that. Now, the other thing you should do is for the wrap, for the one-line wrap account, you also need to book that accrual for 3352.24 to indicate you bump the portfolio value for that income. And then you can go make transactions and click auto match. Okay, save. All right, we'll deal with distributions. Now, the next part in relation to distribution is obviously the tax statements. Now, I'll quickly show you how I do a tax statements in this example. Again, you go to business events. I already processed one, so click type. Here's tax statement. It's obviously incomplete. Now, How do you find that information? So distribution tax statement information is also on the tax statement handouts. It's on page 10. I'll quickly show you a breakdown. What I did is, interest received 821.73. You report here. You got dividend franked, and franking credits 46.64. Interest income. So you basically go along the table to enter that information. On the foreign income side, it is foreign tax credit of 297.07. The gross foreign income is 1647. So if you subtract the foreign tax credit, the difference is basically 1350.83. On the capital gain information, so that there's further breakdown on this report in the handouts. It's, if I can find that for you, just bear with me. CGT distribution. That's on page 17. Sorry, 17. So it breaks down to your TAR, non-TAR. So TAR is taxable Australian real property, non-TAR is non-taxable Australian real property. So normally non-TAR relates to foreign and the other one relates to domestic. So that's how I enter those amounts based on that summaries. And the CGT concession amount is 1174.82, so that's the non-assessable gain amount. Okay, so that's the capital gain information. Then the next part, straight after that, page 11, is to do with the non-assessable information. So if we go to summaries section, which is page 19, you've got your tax deferred, which is 121.98. The AMIT amount, so I just sum up the 166.28 plus 0.23. Now, unfortunately, so that information is AMIT generally is not a cash, it's a balancing adjustments. If we go back to slide page 10, there's an amount called assessable non-received of 1131. Now, this is effectively the negative AMIT. That's another upside of AMIT adjustments. So if you use 166.28 plus 0.23 minus that amount is exactly 155.20. So the AMIT should be 155.20, and the balancing item, which is tax exempt to match with the cash, is 155.20, and that amount match exactly to the tax statement, distributing tax statement summary in page 10. So if you add cash 2247.25 plus the receivable amount of 3352.24, you get 5599.49. So that's exactly this amount. So once you're happy, you submit that. So one way you want to make sure is you check the exception report, see if you actually get any exception errors. If there's no exception errors, that means you have reconciled distribution cash and tax statement perfectly. All right, good. There's no exception errors. So we've done distribution, dividends, foreign income, and tax statements. So the next thing we need to do is do a buy and sell. So how do I get that information? Total buy for the wrap account. So it is actually available on the annual statement event. So this is not a tax statement event. So if we go to handouts, annual statements on page 7, it will give you a total purchase for the year, which is 157,326.92. And guess what? That's what I entered here. And total sales. So total sales means you actually sold those investments. It's 107,357.44. And that's what I enter here. Now, with that piece of information, we need to match with whatever left in the cash side. Okay, there are a lot. Now, first thing to avoid, so obviously those transactions, let me just see if I can make it easier to match them off. Let's start with the big one. Okay, total purchase. Total purchase normally will equal to your so this is purchase to the portfolio, so it will be cash out to your cash account. So you match with the cash out values, except this one. Now again, Control Shift, scroll down, and all of them to information settlements, deferred settlements, they are to do with purchase application. So that looks okay. So I'll match that. Okay. Then my total sales will tend to be the net settlement. So this is rebalancing. So when you sell the investment for rebalancing purposes, let's select that and Control Shift. So obviously this one is for my cattle sale, so that should not be part of these transactions. I'll select all of them. Realize accounting gain loss event is not, and the cattle sale is not. So let me just tick that. Oh, okay. And I will untick the cattle sale and match. Okay. And these two happen to be exactly the same value. And let's just match these two. We're done. So we've done all our total sales and total purchase for the year. And all the cash transactions for the bank account, the wrap bank accounts all matched off perfectly. Let me just quickly show you. Okay. Everything's matched. Yeah, good. Okay, next thing I want to show you is now there are still capital gains in relation to the sale, which has not been reflected here. And this is normally done through the realized accounting gain loss event. Now, to record that, I'll show you how I pick up that information. The first thing is, so I already processed that event. Okay. I'll come back to the accounting gain loss amount of 3905, how we calculate that amount, because that one is really a balance item. But what I want to focus is the capital gain or loss information. Now, that's again, it's from the tax statement handouts. So you look at basically capital gain from disposal. So selling shares, managed funds, listed trusts. So this is on page 35. And I have a nice summary running columns. So what I have here is a capital loss of 2653.02, other gains of 944.21. Now, the gross gain is actually inclusive of the other gains, which is 9639.3. If I subtract the other gains, which will give me the value of 8695.09, that's the amount I need to report as discounted gains. And then the system will automatically apply the 1/3 discount to it, and then you will get effectively 5796.69. Okay, but you need to always report the gross amount here. Now, there's action field defer capital gain realized. So if your portfolio wrap account actually taking up traditional CGT relief, and if you have sold some investment that trigger this deferred capital gain amount crystallized, then you need to enter that amount. manually through here, but in this case, it's not applicable. So we'll leave it blank. Okay, so that's the capital gain. So I'll come back to gain loss amount. So I'll just submit that for the moment. Okay, how do I calculate this 3905.87, you may ask? Now, this is effectively a balancing item between what's in the wrap account and what's in the, so what's the, what's the word I try to say? The cost base of the wrap account and what's reflected on the statements. Okay, so what I mean by that is if you go to your one line wrap, select this premium SMA account. Now let's say I just temporarily remove this. Okay, just delete this. Okay, your running balance. So the closing balance is effectively the cost base of your wrap account. It's currently at 320,560.36. Now, if you in the handout, there's a investment valuation report, and on page 3 of the portfolio valuation report, and your portfolio cost or actual cost combined with cash is 357,748.38. If we subtract that, the actual cash balance of 32,282.15, then you have your portfolio cost at 324,466.23. And the difference between that amount and what's carrying in this amount is effectively your realized gains amount. So that's why you add this new amount at 30 June. Realized gain. I'll be cashing. What was the value? Let me just refresh that. 3905.87. 3905.87. Save transactions. And if you see that, and that's 324,466.24. So that's your cost of your portfolio. Then your auto match. Save. That's it. That's all you need to do. Oh, one more thing. Obviously, there's a valuation for the online wrap. So the cash, again, if you go back to the portfolio valuation, the cash is 32,282.15. It matches exactly to that report. And the valuation, I just put in the difference between the market value, which is 376,155.94 minus the cash, you get 343,873.79. And you put a market value on 30 June 2018, run on peer update, it will pick up that valuation beautifully. Okay, that's all for the single wrap. I've pretty much done everything. It's a couple of, the next thing I want to do is the borrowing costs. So to set up borrowing costs, I already gone through that, but again, use custom holding account. Then to book the initial borrowing costs, so say they took they incurred a borrowing cost on 1st July to buy a property, and it's $5,000, and then you create amortization costs. So what you do is on 30 June 2018, and it's amortization borrowing. It'll be cash, exactly 20% or 1/5 of. So it's $1,000. Save transactions. So that will reduce the balance to 4,000, but you got matchable events. So you can match transactions. I will just create match to new, and it will be a fund expense, fund general investment expense. Hopefully I already create amortization on borrowing costs under properties. Yep. So there's no GST, so I'll just remove that and submit. Oh, the investment account. So this is in relation to the property. So I select the property. Done. Okay. So that's borrowing costs. And obviously, if you want to use the expense method, then I already explained that in the slides previously. Last but not least, the cattle sale. So this is the last handouts I gave to do with cattle sale. They basically sold 7 cattle and received a net amount of 7,176.29. Let me see where the cash coming through. So the cash coming through to your MP shared account, 76.29. There's GST account for. So the first thing I will do the GST amount. Okay. Okay. GST. So GST received. So this is in relation to obviously a sale of cattle. So you received the GST and 699 point. So that's what you need to do. The contract date is 9th of November 2017. Submit that. Okay. The next thing you need to do is the expenses that's incurred in processing that sale, and that's $520.45. And I just use some sort of investment expense. Or actually credit selling costs. It's a credible acquisition. You can record the GST 44.14, and it's in relation to selling the cattle. Happy with that? Submit. Now, the balancing item is effectively the gains you receive. You need to record from the sale of the cattle. So for customer holding account point of view, you let me just quickly check that bank statements. So I have livestock cattle credit as customer holding account. Basically, it's 100 cattle, $300 each. That's the original costs. And this day, 9th of November, I sold 7 cattle, so $300 each. So my cost base is reduced by 2,100. I'm doing cash out of 2,100, and I still have this amount of cost left on my cattle. Okay, so you do that, then you match that with the cash that you received, and the difference in theory should be your gains, less the cost that's incurred, or the GST, which is, yeah, also that's your gain for so you need to process the gain. The gain is already done here on the cell. It's calculated basically is 7696.74 minus the GST minus the costs, and so you made a gain. I recreated an income event or customized income profit on stock sale for 097.03. Submit that. Okay. Okay. So this is already done, so I'll just delete that one. Okay. Then you just match those transactions. So I have the cash, I have the GST, the profit and expense, and perfectly matched. And that's it. That's all. And I quickly show you the operating statements. Let me just run a period update to reflect that. Okay. Now it's more meaningful to look at the statement of financial position and the operating statements. So I got my single line wrap here. I have some kettles. Now, obviously, you can still put a market value against the kettles. Borrowing cost was 5,000, but now 4,000. Then I have my cash account there. So all the franking credit, foreign tax credit flow through nicely. There's there's deferred tax liabilities. Okay, and the GST. So GST, I'll quickly show you the breakdown. So the advisor fee, I can claim GST. This is the GST that I received on the cattle sale, so I need to report that. Okay, now let's go through the operating statements quickly. So market gains on the so this is including the realized and unrealized gains on the separate managed accounts or one-line wrap accounts, the distributions, the dividends, the foreign incomes, the interests, and the profit on the cattle sale, and the bank fees, advisor fees, platform fees, the amortization on the property expense. Yeah, so that's all for my presentation. Thank you for your kind attentions. The session will still be running an extra 10 or 15 minutes to allow you to think of any questions and do your survey feedbacks. And I thank you very much and have a great afternoon.